Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Hey, Sip, how you doing, man?
Love the love the shirt, love the design, love the fashion. Looking very, very swagged out this morning.
I
What?
gotta,
You must be in a good mood.
I gotta say, I'm kind of regretting that Liza and I have to go back to We've been at our beach house now for over 2 weeks, and it's showing. You can see on my face, you can see on my clothes. I'm just having the ball of my life.
The summer doldrums are treating you well.
That's exactly right. Your shirt looks pretty good too, man.
Yeah, I was feeling festive this week myself.
That's all right.
All right. So today is July 15th, our favorite day of the month, and that's options expiration.
Expiration day. That's
Is
right.
there anything on that front other than we're just looking at our positions closing out, setting
Yeah.
ourselves up for the next couple of weeks? Anything else that should be, mentioned about that?
So just reminders that now that when we close out of sold option positions, when we sell premium and they expire, that means that we no longer have that obligation in order to, if our buyer comes knocking, we don't have that obligation to cater to the buyer anymore. So we look for opportunities now to get rid of our protective options at a profit. Our protective options were protecting us should our buyer come knocking. So we don't need those anymore. It's time to cash out of those to get the double whammy.
Yeah, and later on in the show, we will go over a couple examples that the team
Exactly.
at Trading Trainers is looking at to put on. I feel like we should get a little caught up on where we are with the market in general. Obviously, the ongoing news is inflation, 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 and we had a pretty big number come out this week with the CPI number. And on top of that, we had retail sales numbers out today. So a mixed bag, but what are your thoughts in general? I'm going to go ahead and put up the S&P chart as well so we can get a little
Sure.
sense of
Absolutely.
where things are.
So the scoop is that CPI came out earlier this week, and it was saying, inflation is the worst that we've seen in 40 years since 1981. And so people started to sell off. And then at the same time, this morning, retail sales came out, plus earnings is coming out, and those are all positive. Now, the scoop is with a lot of this stuff is that it's looking in the past, right? So CPI included especially high gas prices. Now, I don't know about you, but I've already started to see gas prices start to drop, especially with oil being well below $100 now. It's like for West Texas crude, it's $95. For some of the good stuff, it's $99 a barrel. It's going down from there. And so the gas prices are slowly starting to fall as well. And so that number, that CPI number, was definitely a look in the past. Doesn't mean that inflation isn't horrible. It just means it's not as bad as people think it is, right? Then we've also got the retail sales number being incredibly strong this morning, and it's causing a big uptick in the market, along with especially banks reporting really good earnings. And so people don't know what to do. Mix that in with summer doldrums, where there's a lot of people checking out from their investing world. And whenever people check out, what that means is that fewer people are in the market making decisions. And usually those few people who are in the market making decisions when everybody else checks out are kind of people that are extreme, right? If you're like, if you're somebody who wants to stay in the hurricane versus, get the heck out of Dodge, then you're kind of an extreme personality person. And that kind of, in some respects, explains the ups and downs every day based on the news, because normal investors who are kind of checked out for the summer wouldn't be as like reactive.
Yeah, and so that's been weighing in on whether the Fed is going to be increasing rates coming up, and the conversation now is it's going to be 75 basis points, but they might even go up to 100 basis points,
Yeah, they
and I
haven't done
think
that in a while.
yeah, and I think they're pricing that in a little bit. But looking at your chart, you're right in the sense that things are slowing down, the moves are slowing down, and we're starting to just consolidate here in that what is that like 3800, 3900.
Yeah, yeah, and so this is a really interesting thing, and it's materializing quite along with our theme of summer doldrums. Let's zoom in. So we know that we've been in this downtrend. I mean, that's clear. But when we look at what's happened just the last month, we saw this push up and we thought that this push up was part of the downtrend. We call this range contraction. Whenever we get a kind of a breather from the current long-term downtrend, we get this range contraction, and we like it to contract to about halfway the previous move, and it did. And so we were like, okay, the downtrend continues. But then we were expecting another range expansion move. Range expansion is when it's going in the direction of the main trend. And whenever we see a range expansion move, we expect it to not only go as far as the previous move, which would bring us here, but about 25% even further. That's what causes that trend to continue. And as you can see right here, that surely didn't happen. In fact, it kind of stalled at the halfway mark, making us question last week, are we seeing a bottom? What the heck are we seeing? Let's let it mature. Well, it kind of has matured because the next move was not 125% or more, and it also wasn't 50%. It was about 100%. It was a slightly less than 100% move of the previous move. And then this move was about 100%, and now it's reversing again. In fact, we're about to get this confirmed that this was the bottom yesterday. And so if you keep going to about 100%, that's sideways movement. And that sideways movement is perfect for describing the summer doldrums.
Right, and we might have to wait another 2 weeks of this little range because the next meeting I believe is the 26th, 27th, right? So that's
Yeah, the
and
26th, 27th of July.
so at the end of the month, if they do something drastic, even just 75 basis points, might move the market, but we are in these doldrums. I do want to get some feedback or your thoughts on the Fed balance sheet because we talked about it last week, and you had mentioned um, that we do the show before they update the numbers, and it's kind of like doesn't we're not giving the most up to date data, but you have some follow up on that.
Yeah, absolutely. So we've been watching the Fed balance sheet a lot because the Fed has basically three different tools that it uses to control inflation or deflation, right? The first tool is interest rates, makes it harder to borrow money, right? And that slows everything down. Number two, they make it more they can move the risk needle in the markets by actually being a trader in the markets. And what's interesting about them is, you and I, when we go trading in the markets, we have to use some hard earned cash that we earned somehow by working somewhere. Well, the Fed, they're the only person who can go and basically use their trading platform and buy and sell, and they don't have to worry about where the cash comes from. When they do buying, that cash just magically gets created. And when they do selling, that cash just gets shredded magically. They, in other words, don't have to worry about buying. So this is a graph of what they've been doing the last 3 months with regards to buying and selling. Now, they're literally in their real time buying and selling bonds. Now, they're limited to what they can buy and sell. They've been buying and selling treasury bonds. They've been buying and selling just Class A mortgage bonds. And just recently, they've been buying and selling like the best corporate bonds. But they've been kind of talking about how they're going to be selling bonds. And they every Thursday afternoon they report on what they did the last week. And they give it kind of in numbers form, and it's kind of hard to parse through. And then they have this beautiful graph that I'm showing on the screen right now. And this graph actually doesn't get updated with the Thursday numbers until Friday, about an hour after our show goes. So last week I was commenting about how they keep saying they're going to be talking about selling, doing some selling, and yet what they were doing was buying. And then an hour after the show came out, I saw that they had done a pretty big sell of about $45 billion. So we'll see right after the show's open, not shortly after, how much their bond purchase. But they're trying right now. This is saying that their balance sheet is at about $8.9 trillion. They want to sell all the way down to about $4.5 trillion. And they plan to do that, or they've been saying they want to do that before 2025. So that's a lot of cash shredding that they're taking out of the markets, making it harder for us to do investing, which then extends to kind of controlling deflation, which brings up the third way, and probably the most powerful way that the Fed controls inflation, and that's their rhetoric, right? When they say they're going to do something, they don't necessarily have to do it exactly the way they said it. Just them saying stuff affects the market, like investors get crazy. And, so it's really interesting to watch, but I keep watching this because this directly affects what's happening in the crypto markets, the housing markets, the commodities markets, the stock markets and options markets, and the bonds market. So I watch this very carefully.
Yeah, and there were some comments this morning about labor that I believe were positive from the Fed chairman. So anytime they speak, it does move the markets. I do have a question about this balance sheet here. Does currency have anything to does currency rates have any impact? Because a big storyline this week was the Euro US dollar parity. So I'm just curious, does that affect this at all?
This actually affects that. So what by it's called sopping up liquidity, or shredding that extra cash that the Fed, because when the Fed was buying stuff, they were injecting cash into the markets and into the economy. And now that they're talking about selling stuff, when they sell it, they don't get to keep that money. They have to shred it, right? So they're talking about taking cash out of the flow of the markets. And when they do that, it actually props up our dollar. It makes our dollar worth more because, if say for instance, you have a certain amount of credibility and you spread it really thin, then it's not worth very much. But if you start, concentrating your credibility on a fewer number of dollars, then that each dollar is worth more. That, combined with the fact that the rest of the world is suffering worse than we are. So even though here in the States, we feel like, oh, shoot, it's the end of the world. Gas prices are high, food prices are high. I can't afford my rents or my mortgages and stuff like that. It's actually worse in the rest of the developed world. And what they're talking about is it's really bad in Europe, to the point where their euro has so much, they're having so much trouble trying to control inflation. And we're actually doing a better job than them. And so the euro has come down in value, whereas the dollar is coming up to value. And it's the first time, I think, ever that they're at parity. Well, usually the euro is worth like $1.10 to $1.30 compared to the US dollar. So this actually affects that versus the other way around.
Interesting. Yeah, I assume that's going to be a narrative that we hear over through the end of the year. This dollar US euro parity. You
I got to
mentioned.
tell you one more thing, though, Sip. Well, I wanted to come back. Don't let me forget. I want to come back and circle to the retail sales this morning.
Well, let's just touch on it now because we're still on that, and I'm looking at the numbers exactly. They were up 1% month over month. So people are spending still.
Yeah, and so I want to bring us back to a topic that we covered about 3 weeks ago on this show, and we basically said when people are afraid that things are going to get more expensive, they start buying now, right? They start hoarding. And so I think that a lot of that is happening right now. So this is where the Fed has to be very careful because we could see a spike before a decline in retail sales. And remember, retail sales, we're looking back in time, not looking forward in time. And so, looking back in time, we've been seeing this spike, but I think people are hoarding versus people are just, buying like usual. I think people are starting to buy more, saying, oh my gosh, if I don't buy this and this now, it's going to just be more expensive because of inflation in a month from now.
Sure. Yeah. And we talked about last week. We talked about the car loan market, and I'm curious if any of this is having impact on the housing market, and what the effects of that might look like. I think that, or
Yeah.
in our notes here, you have home prices aren't just going to decline, or rent
Yeah.
prices aren't going to just decline, and that's
So
something that most everyday people are having to deal with.
it is. It is. So, first of all, people don't have as much money right now because they're paying a ton in order to pay for their, gas to get, at least back and forth to work. They're also now paying at least, according to the CPI numbers, 10% more for their food, in some cases, even more, depending on what they're buying. But just the staples are costing more. So that means that there's less money for your rent and your mortgage payment. Now, throw in the fact that the interest rates are going up, right? Before, if interest rates for a fixed loan were, if you could afford, say, for instance, 350,000, now with a 6% loan, you're probably only able to afford maybe 240,000. So all of these things are pointing at that housing prices should decline, but they're not. And so I've been digging in because last week we were talking about how already used car prices are starting to decline because the supply of cars is starting to increase and the demand is going down. And I was wondering again, is the same thing happening in the housing market? So, a couple of the statistics that I've looked at over the past month is building permits, right? Building permits is keeps track of how many time, if builders are out there looking to build stuff, and building permits has declined. Okay. Then housing starts is actually when a construction company takes that building permit and starts to build a house, declined. And then listings, so listings for existing homes and new homes, declined. And so what does that mean? It means that people still need to find homes, but the supply is drying up. And so prices are not going to, it doesn't seem like prices are going to go down just because there's that imbalance of supply and demand. Now, I don't think that sellers can do what they've been doing over the last year, which is like jacking up the value of their house higher than what it's worth, and then being able to sell it in a buying frenzy. I think those days are going to come to an end if they haven't already. But I don't think prices are going to decline. And because things are so expensive, we're going to start to see that spillover, or we already are seeing that spillover into the rental market. People are saying, man, I can't afford right now, so I'm going to rent. And so therefore rents are going up. And I don't, usually rents don't go down. So I think rents are up and home prices are up, and they're going to stay up. I don't see them actually going down over the next years. I think that they'll just stabilize.
Yeah, and I imagine that if the Fed increases rates again, that's going to slow things down even more.
It'll slow up,
And
but the prices aren't. I don't think that we're going to see prices drop just because there is a shortage of housing. There has been a shortage of housing since 2008 for the number of people that need to be housed.
Well, we'll keep. Go
I
ahead.
think what I do think is gonna happen is there's a ton of people who locked in low interest rates. And so I think that whereas people were moving every like 2 or 3 years, upgrading and doing things like that, I think for maybe the rest of 2020 or at least into the next 5 years, maybe even 7 years, I think we're gonna see people maybe doing more remodeling and staying put to take advantage of that, locked in interest rate and not trade up a 3% loan for like a 6% loan to get into something different. So I think we're going to watch Home Depot, we're going to watch Lowe's stocks, anything that has to do with furnishing and remodeling in the next 5 years I think is going to be something we tune into.
Certainly. We'll definitely keep an eye on that. All right. In this next portion of the show, what we're going to do is run through a couple of examples. As we did mention, today is options expiration. And so AJ's got a nice setup that he's going to be looking at. But before we go into that, we want to invite everybody to a free workshop that AJ hosts every day. I'm going to go ahead and put the link in the chat so that anybody that's interested in learning some of the strategies, learning more about Trading Trainer, the program, AJ's approach to things, hit that link, jump in there, and check out the lesson and come back and let us know what you think. In the meantime, if anybody has a stock or a ticker that they want AJ to look at, feel free to throw it into the chat. We're going to play our little commercial here to get you hyped up for that webinar, and then we'll be back to talk some specific options trades.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. And so the first ticker of the day is going to be Conagra Brands, which I believe is a pretty big ag product. And there's a lot that's been going on in agriculture. So what are you seeing in Conagra, AJ?
Well, I wanted to feature this one, and I got to give a shout out to the program participants because they found this ticker for us
Nice.
last night. And so, if you take a look, this is a 6-month chart. If I go back a couple years, Conagra has stayed in basically the same trading zone. And in fact, let me go back even more. I'm going to go back 10 years. And so
Wow.
you can see here that Conagra, I mean, they're a staple. If you've ever been into like, the actual like raw ingredients like flour and stuff like that, you know that you've probably been a customer of Conagra Brands stuff. You definitely are a consumer, whether you know it or not, because whether you're buying prepared foods or not, they were made with these staples. So this company isn't going anywhere. This company's been a staple for forever, and they tend to go sideways. So this is a candidate that we last night we set up on it. We're not ready with any sort of signals, but I wanted to show really quick. We've got this members portal that folks access who are part of our program, and part of that members portal is a download area, and we give all of our users, because a lot of people say, gosh, there's so many different choices with options with strike prices and expiration dates, and should I use calls, should I use puts? We have this premium selling worksheet. It's kind of an Excel spreadsheet. It's an Excel or Google sheet, and it's really cool because on our Thursday night calls, what we wind up doing, I'm featuring it right here. What we wind up doing is just running down a series of questions. What's support and resistance? Where do you want to bail out on? What are some of the near-term options? Everything in blue tells us the instructions on how to fill out the form. And we just go down the list and look what it spits out. It spits out a trade plan for you to do the various premium selling strategies like write a covered call, write a covered put, do a bull call, diagonal debit spread, bear put. So we've basically taken all of the, rocket science or confusing parts of all the options complexity out of it and come up with this cool tool that and what's nice is it adjusts for the individual's portfolio. So if you want to have a risk to your portfolio of 2%, you can have one thing. If you want it to be up at 4%, you can have another thing. If your portfolio is only $5,000, and it will adjust the risk modeling based on your whole portfolio and your risk tolerance. So it's kind of neat because you can personalize your trade plan to you, and then it's just a matter of following the trade plan. So we did that last night, and it told us exactly what we need to look for and what to go for. So I wanted to, number one, feature this symbol because I think not only during the summer doldrums, but for a long time after, you could be selling premium against Conagra, and it's at that right range. And it's such a big company that if you take a look at the options chain, I mean, you've got all sorts of liquidity on the various options. Here's the August series. So you've got more liquidity. You're not going to have a problem buying and selling these particular options liquidity. And so this is a great candidate. And as far as, should you come and join us, absolutely grab one of these tools. It's yours to keep and learn how easy it can be to plan these trades out.
All right, so we're basically adding Conagra to the watch list, and we're going to be keeping an eye. One thing that I do notice from our past episodes is you're looking for that refined support and resistance, right? And so
That's correct.
are those black lines that we're keeping an eye on?
I'm watching $31 to $36. And I always like to watch a little bit past. So I've got a couple of lines, but my actual support and resistance is 31 and 36. And you can see that right here in the configuration. I typed in 31 and I typed in 36. And I said, since 31 and 36 are my support and resistance, this is where I'm going to bail out, slightly outside of 31, which is 30, and slightly outside of 36, 37. So this is where the trade zone is defined, and it takes it from there. And then we even have these other tabs where you can go through and you can back test your plan. So, it doesn't have to be difficult. And when you find a beautiful symbol that's trending just like this, that has a ton of liquidity, then it's like, oh gosh, what option should I choose? Well, it actually is quite methodical, and, grab this tool. That's all I got to say.
Yeah, you can get that tool just by joining the workshop. So head on over into the workshop or send a DM or leave a comment, and we'll get you the tool in the easiest fashion. Moving on to some of our member questions. Keeping on the topic of housing, a big name that a lot of people look at specifically as a stock when you refer to the housing market is Toll Brothers. And Helga from Charleston, South Carolina is interested to know what we've got going on in Toll Brothers.
All right, so take a look at what we've got going on with Toll Brothers. A bit and look at the bigger picture. So Toll Brothers hit kind of a top, just like the broad market, at the end of November. Started like the broad market, but now Toll Brothers looks like it has bottomed and it's starting to go into that sideways pattern. So let's now that we've got that bigger picture, let's zoom in a little bit. I really like to use the fast MACD. This is Gerald Appel and Marvin Appel's baby here. It's the MACD. And instead of using the traditional 12, 26, 9 settings, it's using the 6, 19, 3 settings. And these crossings give me end of day signals. And so I come in after the market's closed and I see whether or not I have a crossing. And so a crossing, you can see the crossing itself, but the software here goes ahead and puts a little arrow. So I can see whether or not I have an arrow. And if I have an arrow, that means that the next day I'm going to try to either open or close a position. So I got an arrow yesterday, which was telling me that this is a good time today, is a good time to be thinking about, uh, excuse me, either shorting some Toll Brothers stock or buying a back month put option. And so today I've been looking for that opportunity. Now, it doesn't look like today, and I got to stress this, I'm just following my rules. What I look for on the actual day I'm trading is to make sure that the prices are moving in the direction I want them to. So if this was a top, I would be expecting for prices to be moving down. Indeed, prices are not moving down. And prices are moving up today. So I may not open that position. I may get to the end of today and decide that I need to reevaluate whether I want to watch this again on Monday. I probably will. It looks like that the signal's not going away. But I want to get in at a top or slightly after a top. That way I'll be either shorting or buying my put option for as least expensive as I can. And then it's just a matter of waiting. So I really like Toll Brothers and I like the company, and I would like to, get into a position. So I want to set up my initial purchase, which is my covering position. So yeah, this is what was the name of the person again?
This is Helga.
Helga, I think that I'd be ready if I see follow through to this crossing, to this top forming. If I see that follow through, I'd be ready to, in either my paper trading log or my real money log, do either some shorting of Toll Brothers stock, or I would go ahead and buy some back month put options. So go out to January 2023 or further and go a little bit deeper in the money. In fact, I like to try to get ones that are trading at parity. Um, that means that they're all intrinsic value, very little extrinsic value, and get that initial covering position under your belt. And even if we never sell premium and Toll Brothers starts to sink, that initial covering position will appreciate and you'll make a fortune on it. So I like that.
Yeah, it will definitely keep an eye on Toll Brothers just because housing is such a major player in the overall economy. So definitely something we'll keep an eye on. All right, moving on to a name that we discussed last week, and I believe that Chris from Sedona, Arizona, is looking for a little bit
No.
of follow up on ON Semiconductors, ticker symbol ON. What are you seeing, AJ?
All right. All right. So this is, we were talking about either going long some ON semiconductor or buying some back month call options. And we had gotten a signal. Again, this kind of goes with my end of day signal. And by the way, just as a side note, the people are saying, so if you get a signal that night, do you actually sit through the trading session the next day? No. I program in to these automated trading platforms to look at a few simple, evaluations and decide, should we be opening or closing the position. I don't sit through any trading sessions myself. I just come back at the end of every day. I just want to stress that I do end of day trading. I never really get involved during the trading session because if you've ever seen me, like for instance, at a casino, or that's pretty much what being part of the live trading session is. I start grabbing my wallet and start doing stupid emotional buys and sells. So no, I do it all end of day and then let, the black and white rules that the computer follows open and close my positions for me. With that said, so we talked about last week that we got this bottom signal end of day and that we were thinking of, whether or not we would get into that if we had follow through, and we did get follow through. And so if you wanted to buy some long buy some ON semiconductor stock or buy some of those back month put options. July 8th, about a week ago, last Friday, was a good day to do that. And yes, it did stall, but it looks like it's doing exactly like we expect it to do. And so we're going to watch it just march up as high as it'll march up. And then once it starts to give us that signal that it has found a top, that's when we decide to either sell or set up that premium trade. And the kind of differentiation or the deciding factor as to whether we want to sell or not would be, how far has it moved? So I would sell if it goes up to $70. So if it goes through my zone here of support and resistance and gets to $70 or higher, I'd probably just take my money and run, take all that gains. But if it falls short of that, anywhere here between like 62 to 68 to 70, that's a perfect premium trade right there. And ON Semiconductor has been supporting those premium trades for the last 6 months. And so we're just following on. And so, yeah, you might be able, if you didn't get into your initial covering position yet, you might be able to still scrape by, even though we got the signal last Friday, because it did stall. But it does look like it's taking off here. And so we're just getting ready to either sell or buy premium. We're just waiting for the next piece. We'll probably be looking at selling August premium when the timing comes.
And I don't know if this might have any effect, but I did see on social media yesterday that Nancy Pelosi took a $5 million position in NVIDIA, and they're trying to push this American chip bill through Congress. So I'm assuming if both of those things do end up, following through, that bodes well for ON Semiconductors. I can only imagine, right?
Yeah. Yes. Yes.
All right.
We'll say I don't trust the politicians.
Well, she's been known to take positions in companies that she then does some sort of legislation to benefit, and semiconductors are one that's been on the agenda for quite some
Yes.
time, at least in the U.S. So that that's definitely looking like a great setup. So thank you for the inquiry, Chris. Moving on to another name that we have discussed previously, and that's TEVA Pharmaceuticals. So Drew from Louisville, Kentucky, is interested in ticker symbol TEVA. What are you seeing, AJ?
All right, so we're waiting to see. Let's play through a little bit of history here. So again, end of day signal, right? This guy. And did we form a bottom? Did we get our follow through? Perhaps, but then we immediately got a reversal of that. And so whether or not you sold premium, if I remember correctly, with TEVA Pharmaceuticals, we got into our initial covering position by shorting some TEVA, and after shorting the TEVA or buying some back month put options, we're now looking for that opportunity to set up the premium trade. So one opportunity was back on June 27th, which means if you set up that premium trade, depending on the strike price of your put that you sold, you may be getting exercised today, which is not a problem, because when you get exercised out of your put option, what that means is that your shorted position or your back month put option goes away, and you take the max profit on that trade available at that moment. And you're left now with your protective call option, which as soon as you find a bottom and it starts to head back up, that call option is now going to get into its profit zone. We generally buy protection 3 to 6 months out, so you have some time to let that thing appreciate. So we're waiting for a bottom. If you didn't sell premium at that opportunity, and it doesn't look like when we got the next signal that actually played through. When we got the next signal, it never gave us follow through. So if you didn't sell premium on that day, on June 24, then we're just waiting for the next signal here, and it looks like it's going to be any moment now, and we'll now sell premium for the August month. It's all mechanical, Sip. These option trades, there is a little bit of art in picking them, but a lot of that can be automated, like with our spreadsheet. But then you just wait, and so people are always kind of a little bit hesitant with option strategies, but options give us the flexibility to profit whether the market's going up, down, or sideways, especially sideways. And so don't be afraid of the unknown, especially when it can be distilled down to really easy steps.
Yeah, and if anyone wants to learn specifics of the up, down, in between, sideways, grab that spreadsheet, that tool that AJ showed earlier in the show, because that will teach you the terminology, the specifics, and
Yeah,
then putting in the numbers. I think really helps people see the potential of these trades, and really try and give yourself
repetition is
rules. Yeah,
key.
repetition. And
Yeah,
as you always mentioned, doing so in a sim account until you're confident enough doing it, with real money. That would always be
yeah,
advisable from us. All right.
absolutely.
All right, wonderful. So, man, for being in summer doldrums, I feel like we've got a lot of action in the news, but not so much um, in the market movements. The markets are rallying, continuing off that retail sales number, and so anything that we should be keeping an eye on going into the weekend, going into next week, other than some of the things that we've already touched on.
Yeah, no, this is when we have an options expiration day like we are today, we then just turn our attention a month from now to our August expiration and see where can we sell premium in the next couple of, days, if not couple of weeks, to take advantage of that next payday.
And it's as simple as that. So if anybody's interested in learning how to one of these paydays to add a new type of payday to your already existing payday, head on over to that workshop. The link is in the chat. We'll go ahead and throw it in there again. If you've enjoyed the content, hit that like, hit that follow, hit that subscribe button. Feel free to ask questions. I know the team is always very diligent in getting back to people. And if you're interested in being part of AJ's community, the weekly mastermind calls, feel free to ask about how to get into that as well. I know they've got gems in that session every week, and we can't unveil them on the show because that's just part of being in the community. But you get a little bit of the glimpse of what the team is talking about, and there's definitely opportunities. Besides market stuff, anything in life that you're going to be getting into this weekend?
We did extend our stay here at our beach house for an additional day, but we're finally going to be heading back, I think, on Sunday to the rigmarole around Washington, D.C.
Hey, so on my end, not much. Things are definitely slowing down, but excited to continue to enhance my investing knowledge. So, with
There you
that,
go.
ladies and gentlemen, we appreciate your time. AJ, I appreciate your time this morning, and we'll catch everybody next week.
See you later, everybody.
Adios.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.